Joining me now is Justin Reid. He's the president and CEO at Troilus Gold. Justin, good to see you again.
Hi, Mark. Great to see you.
Now, you have some big news you're going to give us, and we'll get to that in just a moment. But it's always good to get a table setter and sort of a refresher for our viewers and our investing network on the key asset that the company is working on, the past producing large gold and copper Troilus mine in Quebec. You've got a feasibility study, and the economics look pretty robust. So just a snapshot, if you could, off the top.
Sure. 7 years of drilling, 400,000 meters, defining about 13 million ounces equivalent. When I say equivalent, about 80% gold and 20% copper. Feasibility is complete, 4.5 years into permitting. Now moving through detailed engineering. We are targeting an operation with a 22-year mine life, mining 50,000 tons of ore a day, which will produce just over 320,000 ounces equivalent per year, peaking out at over 550,000 during our best years. Targeting a 2028 startup after a 2-year construction period. So moving right along.
Right, and with those kinds of numbers, those catch attention. And so in September, the last time we spoke, you said the company had arranged 4 letters of intent from 4 different global export credit agencies for a potential project financing of up to 1.3 billion US. And now the company is announcing a non-binding term sheet with 3 global financial institutions for potential project financing of up to 700 million US. So this is big time. These are significant numbers. So what can you tell us about this today?
Yeah, over the last 6 months, we went to various refiners and equipment manufacturers across the European Union, and they provided us via their export credit agencies with potential funding. For example, Arubis in Germany, which is the largest refiner in Germany, offered us 500 million US covered should we provide 60% of our concentrate into Arubis. Ultimately, we won't give them 60%, we'll give them 33 or 40%, something like that, and so there'll be a lesser number. And so all these export credit agencies provide guarantees. What you have to do is put together a debt syndicate with the lead arrangers, and these lead arrangers provide their own capital, plus they work on behalf of the export credit agencies. So this morning we announced our syndicated lead mandate, which is led by SocGen out of Paris, KfW out of Frankfurt, and Export Development Canada, which is a direct lender itself. And together we've really dove into the model and on a 70-30 split between debt and equity and or pseudo equity or royalties and streams, we've come up with a fully mandated commitment, and 700 million is the optimum number for us. It can easily be covered by our finance model, and we're off to the races. So it's fully mandated now. The LOIs have converted into commitments, and now we are working on the detailed due diligence associated with that. And our intention is to have financial completion towards the end of the year.
So, Justin, what do you think that these arrangements say and indicate about the fundamentals of the project and the strategic importance as well?
A lot, I think. First of all, 80% of our revenue is from gold, 20% is from copper. However, and I said it before to you, copper is going to fund this project, and we are the largest potential copper producer in the permitting stage in Eastern Canada right now. And strategically, copper is a critical mineral both to Quebec, to Canada, and to the European Union. And so also coupled with the shutdown of Cobre Panama, which is the 6th largest copper producer in the world, there is a real negative supply impact on copper. there is a lot of refining capacity and there's not a lot of new concentrate coming on. And so our timing on a supply demand basis on global copper concentrate is excellent. And the ability to secure this funding based on those fundamentals just shows our timing is really right.
All right. So while these so-called MLAs conduct their due diligence, I understand that you're also in talks ongoing about other types of project financing as well, including some potential off-take agreements, which you touched on earlier. Can you flesh that out a little bit for us?
Yeah, we have three refiners that I would say are going to be targeted as part of this. I touched on Arubis already. Then there's Boliden, which is in Sweden and Finland. And historically, the Troilus concentrate went to both these already, so it's well known. And then thirdly is the Horn Smelter in Rouen, which is run by Glencore, and really is our domestic refining capacity, and probably economically the best place to go. And certainly we think it's very important politically to make sure that we keep domestic supply in Quebec and in Canada. And so we have terms from all of them. We're in advanced negotiations now, and I expect we'll have it all wrapped up very shortly.
And now the company has said, and you said, that some other catalysts for this year for Troilus would be final submission of the environmental and social impact assessment, and also the ongoing detailed engineering, which is being done by BBA. So can you expand on that?
Obviously the financing is great, and we have more work to do to have financial completion, but it's kind of a moot point if you're not permitted. We're 4.5 years through permitting. Detailed project descriptions are in, consultations are done. Terms of reference have been defined. All of the work has been done, and we've been actively writing our ESIA with the help of Blue Matrix and Stantec, our two consultants. Under the new process, we've had the majority of the ESIA already reviewed, chapter by chapter, by all the regulatory authorities. And we put out a press release to that. So when we file the ESIA in Q2, we're really confident in an expedited process, simply because the entire document has been thoroughly reviewed. Any concerns, comments, expansions that they needed on our work has already been completed and included or revised, and so that's well advanced. So that'll be filed shortly, and as well our closure plan with it. And that's a major event for us in the sense that the majority of the work that we have to do on the permitting side will be complete, and then we'll manage it. And in Quebec, it's a very clear process, and we would expect ideally permits the middle of 2026, which is not too far away. With regard to BBA, we've kicked off our detailed engineering. So you move from PEA, pre-feasibility, feasibility, and then as you move into the final stages, you take it to detailed engineering. And detailed engineering is far more rigorous than any feasibility study. And that's well underway. We've chose BBA after an RFP with 9 potential leads for us. BBA, we were able to secure the A team. They're Quebec-based. They have experience with Malartic. They have experience with Detour and other similar low-grade bulk tonnage deposits. So being able to secure a Quebec-based team that has expertise in what we're trying to accomplish, saving us time, saving us money, and going to ultimately give us the best outcome.
All right, very good. Lots of irons in the fire there as you move this forward. Now, you've said before, Justin, that this project, and you said off the top, the project really could get a lot bigger, maybe double in size. And to that end, the team is doing some drilling, 15,000 meters at the moment, and also you've got some geophysical surveys either happening now or being planned. So. Can you give us some more detail as to some of the work that's going to be done for the rest of the year?
Yeah, I mean, our reserve right now is 6.8 million ounces equivalent versus our global resource of 13. So our 22-year mine life is only exploiting essentially 50% of our resource to begin with. So it's going to be a very long life generational scale asset. At least that's our hopes. We are spending significant time and money, as you said, 15,000 meters, drilling right now at site. We have 2 rigs going. There's a little bit of geotech work, but the majority of the work is focused around expanding 87. A lot of it's in the southwest deposit as well, along some of our higher grade margins as we're pushing out. There's also some drilling at what we call our West Rim discovery, which is within a couple hundred meters of the edge of the 87 pit. So opportunities for higher grade material early. Geophysical surveys are actually underway as we speak. I think there's 2 crews up right now. We have an area called Deer Lake just south of our deposit, still within the footprint of the mine, and there are a number of spectacular targets that we've identified over the years that we just haven't got to, and so we have some flow through money to spend. It could have immediate impact, and certainly when you're starting to think about where you're going to put waste, where you're going to develop roads, these targets we don't want to leave untested and perhaps have them get in the way in the future. So it's a great time to see what the opportunities are, and that's going to be drilled more probably in the spring after breakup. So we should have some exciting news there, and it's one of my favorite targets actually. So.
All right, sounds good. Now, lastly here, you said before that about 70% of Troilus Gold shares are held firmly by institutional investors, the Quebec government, Caisse de dépôt, and others. So setting them aside and setting that support aside, what about the rest of the shares and the market's perception of the Troilus Gold story? What do you hear from investors? I know the stock's been picking up lately.
Yeah, I mean, $3,000 gold doesn't hurt. Certainly, and you look at the May futures of copper, we're almost at $5. So I think certainly a levered gold and copper play is in vogue right now. So I think we're getting a lot of new eyes on it. As well, I think that we have 0 US exposure, right? All of our financing and all of our trade is going to be east-west, not north-south. And I think that's probably a really good time right now. And the focus for Quebec for projects that could help counter the impact of potential tariffs also is putting an emphasis on large impactful projects within Canada, and Troilus certainly is one of them. Institutionally, we have unbelievable shareholders. You know, Equinox out of New York owns 20% of our company. Franklin out of San Francisco owns 10%. We've just recently welcomed Van Eck out of New York, one of the largest gold funds in the world, and they bought 6.5% of our company. So there is new money coming in, which we haven't seen for a very long time. And to your question of perception, I think Troilus has been, for the last 5 years, kind of head down, just doing the work. We've been well capitalized. We probably haven't marketed as much as we should have. We've always been well capitalized because these institutions essentially just stuck with us. And when we needed capital, they provided the capital for us. So there wasn't a lot of need to go too far afield. I think now, as the scale is coming to vision, the permitting is reaching its final legs, and the project financing is coming together, especially in the light of the incredibly strong commodity market we have right now for copper and gold. The timing for Troilus couldn't be better. Building and financing one of Quebec's or Canada's largest gold and copper mines, putting the team in place to do it with the backing of the people we do, I think this is going to be a great performer this year.
All right. Well, it's all very exciting, Justin. Thank you very much for the update today, and we'll congratulations again, and we'll talk down the road.
Thanks, Mark. Always appreciate it.
All right. Justin Reid, President and CEO at Troilus Gold. Thanks a lot for watching, and we'll talk to you next time.